Getting ready, everyone. Come on in. Enter the studio. Enter the show. We are ready almost. We're ready almost. How about you say we're almost ready? Now we are in the studio. Welcome. I'm Mitch Goldberg. You're watching my live stream. It's the post-market show every Monday through Thursday at 4:30 p.m. Eastern Standard Time. It's called Be the Boss of Your Money. It's all about putting the personal back into personal finance. Be the boss of your money. We're going to talk about investing, personal finance, IRAs, Roth IRAs, taxes, estate planning. We cover a lot of things here, but the idea is for you to become the boss of your money. Today, though, is a special day. As you saw on the thumbnail picture, see that? Happy National Dog Day, August 26, 2021. And Dog Day is, like, to me, the most incredible day of the year. Because if you have a dog, and I'm going to say if you have a pet, you know how much we love our pets. We're going to talk in detail, in depth about pets, investing in the pet business. It's basically investing in love, right? And my wife and I just got a new puppy for our family, literally a week ago. Here he is, by the way. That's the day we took him home. And oh my goodness, he is so special. We are so in love with this dog. It's like we've always had him. And we can't even remember what life was like before we had this little puppy. He's a Cavapoo, by the way. Anyway, so we're going to roll the intro. I've got a couple of things to talk about. I encourage you to ask any questions you have in the comments. If you're watching this in the replay, welcome to you as well. I'd love to see your questions so I can answer them. I will see them. And here we go with the intro. All right, we are back. Okay, we're back in the studio. Thank you so much, everyone, for tuning in. I'm Mitch. If you're just joining us now, you haven't missed a thing. We're going to talk about the pet business. We're going to talk about it in depth. Thank you so much, Jack. I really appreciate that. We are in love. What can I tell you? I cannot wait to get home every day and play with my little puppy, and just what a special thing. We made a little ramp for him to get on the couch because he can't jump on the couch yet. So we made like some pillows and he climbs up the ramp and he's all happy and proud of himself. And then he gives you a look like, you haven't petted me for like 5 seconds. What's going on? Just, one of the best parts of life is having a pet, right? But is it a good place to invest? Short answer is investing in animal care, animal health. The pet business generally has been a really good place to be, but we're going to find out not all pet investments are created equal. Some of them have been, kind of sucky, and some of them have been incredible. And if you're thinking of something like Chewy, yeah, that's just been a over the top home run. So we're going to go over a couple of quick things. We already did the intro. I'm not going to do the intro again, right? But do the intro again. That would be a real we don't want to see the intro again. But let's take a look first, generally speaking, about how the overall market did. I'm going to share the screen. Let me just load up the screen before I send you there. It was a tough day in the markets, quite the opposite of what we've been getting for the last since late last week, but that's okay. Every now and then we're going to have a down day. Volume is light. It's a slow market. Anecdotally speaking, the parking lot of my office building it's practically empty. I mean, you could see tumbleweeds blowing around. Oh, and just for housekeeping, I'm not going to do the live stream next week. I'm just going to take off. I will be posting though next week some repeats. I'm going to go through the archives and find some of what I think would be the most relevant live stream episodes, and I'll be playing those back at 4:30 as if it was the live, except that obviously it'll be a replay. But if you do have any questions or comments during the replays, I will actually see those and get back to you. I just, I won't see it during the play unless I'm actually watching it. But I really do intend to be out. My wife has been telling me I need to take some time off. Like this week and last week, my thing is, instead of taking like 2 weeks off or a full week off, I like to work like a half a day here, a half a day there. And it's become like a half a day every day this week. And, so what does that mean? I'm like half working it, or am I half-assing it? I don't know. Just, it's one of those things. So I see a few of you out there. Give me the thumbs up with, a heart, or the applause, or celebrate if you're watching through LinkedIn. Okay. And always appreciate that. Hi, Judy. I see you out there. You're probably hanging out with Benji right now. Yeah, that's our dog, by the way, Benji. I know it's like the least original dog's name because of the movie Benji that came out when I was a kid. But if you saw this dog, he's a Benji. I mean, he looks like Benji is just the perfect name for this cute little fella, for our little Cavapoo. All right, so let's just get into the good stuff. Pop myself up in the corner here. Dow took a good hit last couple of days, yesterday and the day before, and then some. The gains evaporated. That's okay. Just, that happens. Listen, but that was off, almost 200 points. It's a slow day in the summer. I don't really read much into any one day's trading activity. Nasdaq was off a little bit more percentage-wise, 0.6. S&P off a little bit too. Gold, nothing special. Oil, off a little bit. Nothing too special. The VIX was up pretty good, though, up to almost 19. If we see the VIX go over 20, we are going to have a pullback. The typical pullbacks are like, a 1.5% to 3% pullback in the market. Some news just popped up, biggest moves after hours. We've got to talk real quick about Peloton, because that stock is, it's, I think Peloton lost its tread in aftermarket trading. Peloton lost its tread. Yeah, I am rocking today. I am. Can you see the enthusiasm just bubbling over? And let's take a look at the small caps. Russell 2000 off 1.13%. That's typical. Russell 2000 typically has bigger moves percentage-wise than the other major averages. Yesterday, we talked all about the Russell 2000, why it's such an important index. It's the biggest index that nobody follows, but it's a small cap index. And most likely you have a small cap mutual fund or exchange traded fund somewhere in your overall portfolio, somewhere in your retirement plan. You should follow the Russell 2000. It's a really important index. Okay. So we'll talk more about that, but we went over it yesterday quite a bit. Thank you for the heart. Josh, I see you out there. Thank you very much, buddy. All right. So that's that. Let's take a look at some stocks trading in aftermarket. The one I want to look at first, though, is Peloton. Peloton down just about 10% between the regular session and aftermarket trading, just getting absolutely pounded. No surprise. They guided down in their future forecasted earnings and revenues. They have to discount some models. They're going to discount their main bike product, and they're going to try to bring back the treadmills, which is a lower margin business. But overall, we're back into the economy. Believe it or not, some people do like to get outside and ride a bike as opposed to going on a Peloton, and some people like to work out in a gym, like me. I have workout equipment at home, but I am a huge fan of going to the gym. I love going to the gym. The workouts I get are just better. And I've had really good workouts at home, but the gym is kind of like my place, my home away from home. So I love going to the gym. I would like to get to the gym more often. Life is life. Things get in the way. It's okay. I'm not complaining. I'm an adult. So Peloton getting shellacked in aftermarket trading, down $7 in aftermarket. No surprise that once the pandemic and the shutdowns ended and people started getting out, that, Peloton would see an issue, with maintaining their rapid growth rate. I don't think that's a surprise. I'm kind of surprised people are getting surprised by that surprise. Surprise! Okay, do I have anything for surprise? No. The only thing I have is for surprise, maybe this. Surprise! Okay. So what else is moving after market? The Gap. The Gap jumps 8%. Earnings beat. Apparel is back. Back to school shopping is super strong. We also have the child tax credits going out to everybody. I think everyone just got their second payment, right? You should have if you were entitled to it. HP drops 3%. I don't even know why we pay attention to Hewlett Packard, but it is big enough to warrant following. Workday gains about 3%, which makes sense that Workday gained. You don't even see that on the screen because let me just pop that back into the screen. All right, now I froze. Okay, froze again. All right, I don't know what it is. This is just the vagaries of live streaming, but Workday, it's sales. It's similar to Salesforce.com. It's cloud-based, makes your company operate better, HR and all that stuff. It's up 3% in aftermarket trading, which is no surprise considering how well Salesforce.com did yesterday with their numbers. Marvell fell about 5% despite an earnings beat. Their second quarter revenue is in line. People needed a bigger beat, okay? But that's okay. If Marvell comes down enough, I would not be against considering that as a buy. Ollie's Bargain Outlet sunk more than 12%. By the way, Ollie's Bargain Outlet, it's not really a stock that I follow, but the dollar stores like Dollar General, they've been having a tough time because unlike companies that sell a premium product that could raise their prices because premium buyers are going to pay a premium price, whether if it's up or down a little. But budget conscious consumers are really sensitive to price increases. So if like the outlets can't raise their prices, the dollar stores can't raise their prices, they have to somehow absorb higher inflation costs. So that just crushes their margins. And if they do raise their prices to their customers, the customers just run away. They don't buy stuff. So it's a really tough conundrum. If you take a look at restaurants, the restaurant industry, and the dollar, schmata industry, schmata. I'm a Jew from New York when I say the word schmata, right? My father was in the schmata business, cheap clothing, okay? Stuff that you maybe would get a season out of. That's what schmata is, okay? So, Jack, if you're still watching this, you are laughing because you totally know what I'm talking about, all right? So anyway, the cheap stuff, the stuff that appeals to budget conscious consumers is having a tough time. But, something like a Nike is having a great time because they appeal to a premium shopper. Let's see if I could get the screen back up here. Okay. Yeah. Josh says, boy, you get me, bro. You get me. Yes, you do. Can I get my screen back? That sucks. Well, I could get this screen. I can get that screen. I'm not getting my, not getting that screen. Okay. I'll just skip the screens. We're going to talk about a couple of stocks that I think are worth mentioning in this show right now. Okay. And some of these stocks you may have heard of, but I want to talk about the pet business. All right. So let me get rid of a couple of things. First thing I want to do is I want to go to my watch list and to identify like 6 stocks that are in that group, that space. Okay. And I have a new watch list, oddly enough, called Pet Stocks. So, first one that we have is Chewy. Now, I use Chewy to order stuff from. I don't particularly think Chewy is the best in terms of price. Just my own, my own little expose on the service. I think Chewy is convenient. I have an account with them. I tap something, it comes to me. I could put things on reorder, so I get a shipment of stuff every month of dog food or whatever. I also have a rabbit and a lizard, so it's very helpful to just get all this stuff shipped to me every month, for example, and it's a big help. But Chewy is $89 a share, down from $120. Chewy was basically a pandemic stock when people had nothing to do but go on their screens. And even though I love the pet business, it's still subject to the vagaries of reopening stocks versus pandemic stocks. Woof is a retailer, Petco Health and Wellness. Okay, we've all heard of Petco. I've been into Petco stores before, and I find their stores kind of depressing and unexciting. And if all you're going to do is sell dog food and bird food, they're such commoditized, low margin business. I don't even know why it's a stock, but that stock has gone from 31 to 21. Okay. And I just want to see if I could. All right. Hey, listen, I think we've got the share screen back. All right. I'll pop myself up in the corner. Oh, thank God. I don't know why that happens. Live stream is not quite the same as TV. Okay. So this is my version of TV. Jack says more people are shopping at dollar stores. Cheap. You're right. No, the dollar stores, it's more people are shopping at the dollar stores. They want their money to go further. All I'm saying is that it's very hard for dollar stores that cater to a clientele who's looking more for their money, who's looking for more for their money. It's very hard to raise prices on them. But inflation for plastics and all kinds of goods is going up a lot. So if the dollar stores can't raise their prices on their budget conscious customers, then the dollar stores have to take a hit to their profit margins. And that's one of the things that's been happening. That just want to get that out there. All right. But we'll see. There is definitely room for dollar stores. And we say those are, that's where people go when there's a recession. Anyway, let's keep going. So we talked about Chewy. I want to show you these lines here. You see this line here? Yeah, it's about as big as I'm going to make this screen right now. But, Chewy, 51 to 120, it's 89. So you see the green and the red. The red tells you how far below the stock has come down from its high. So Trupanion from 126, look at that red. Look at the red across the board. Look at Fresh Pet from 186 to 125, and PetSmed Express from 57 all the way to the low. So I covered investing in pet stocks probably about a year ago, and these stocks were the winners, the standout kings of the stock market, and they have come down a lot. So let's take a look at the main ETF in this space, and that is Pause, PAWZ. Okay, it's a cute name, Pause. This is an exchange traded fund, and we'll take a look at performance and compare it to the S&P 500. But I want to show you the holdings in it. It's got IDEX, Zoetis. IDEX and Zoetis are drug companies for animals. Fresh Pet, Chewy, Decra Pharmaceuticals. I'm not familiar with Decra. Trupanion. I don't consider Merck and Nestle to be pet stock. Yeah, they make pet food. Merck makes medications, medicine for animals, and Nestle makes food for pet food. But pets are not the biggest part of their business. When I look at a stock in a sector, I want the pure plays. If I don't want the pure plays, then I'm just going to go with the ETF. But it makes sense to go with the ETF because you saw that a lot of these stocks that were such big winners last year have become really big losers this year. But the ETF hasn't done so badly. So let's get back to that watch list. If you take a look at Chewy, and I think Chewy is basically the premier pet stock in the industry. Okay, and let's just take a look at how Chewy is doing year to date. It's down 0.38% year to date, and the S&P is up year to date. But if we look at pause, okay, if we look at pause, let's take a look at the summary. This ETF is up 14%. So as much as we'd like the pure play, the ETF is doing a lot better. So you have to decide for yourself. If you go with the individual stocks, you could be subject to bigger volatility. You know, an individual stock could go down more or go up more than its sector. And then when you get into sector investing, and I'm saying, you know, the animal business, pets business, that is a real niche space. You know, you could say technology is a sector, but technology includes a huge part of the economy. It includes a great many stocks, including the biggest companies in the world, like Apple. But when you get to something like the pet business, there's not enough pure plays to really come out with just a pure pet stock ETF. And that's why you have to throw in not just pure play pet companies like Trupanion, which is an insurance company, health insurance company for pets. By the way, I have health insurance on my dog through Pets Best, and you know, we'll see how it goes. We just got the dog. We just took him home a week ago, so we haven't had a chance to put a claim through. Hopefully, I'll never put a claim through. Hopefully, my dog lives a nice, long, happy life, and we need very little pet care. But I had a dog. My wife and I had a dog a long time ago, and when it came to end of life care for the dog, you know, over $10,000 in a very short amount of time. And looking back, probably, you know, it was not the best thing for the pet. It was like our pre-child dog. You know, it's a very big thing. So we're going to talk about the industry in a moment, and that in terms of that. But if you go to, I'm going to just take a look at pause ETF. I'm on ETF.com right now, and I want to show you a chart. If I'm scrolling too fast, just move your eyes for a second away from the screen. Okay, here's the chart I want to show you. Let me see if I can make this a little bigger. I could definitely make this a lot bigger. All right, let's take a look at this pause. This is the 1 year, and you see the pause is the blue, and it is simply outperformed the VOO. VOO is the S&P 500. It's the Vanguard S&P 500 index fund. By the way, you cannot invest directly into an index, but you could invest in a security like VOO that tracks or mimics an index. And if you look at the 3 years, okay, you know, the pet stock business, this particular ETF pause has basically doubled that of the S&P 500. The S&P 500 has performed really well. Okay, so I just want to show you that. But if you look at, you know, let's say the max, okay, then if you look at the maximum return when pause came out as an ETF in 2011, it is quadrupled the performance of the S&P 500. But if you look short term, it's underperforming by a pretty healthy amount, the S&P 500. So this is the kind of thing that you have to decide for yourself if you want to get involved with it, because if it's a matter of timing, and often what happens is super performance attracts money. You know, money goes where money grows is the old expression. So that's something that you have to decide for yourself if you want to take the extra risk to earn higher returns than a basic index fund in a particular sector. But talking about the pet business, the reason I bring it up is because today is National Dog Day, and we all love our dogs. And if it was National Cat Day, I guess we would do it for the cat lovers as well. I personally have nothing against cats and cat lovers. And some people are like, I'm a dog person, I hate cats. And some people are like, I love cats, I hate dogs. Like, I don't really get that. I mean, I think we could love them both. They're both animals. And I also have a bearded dragon, which is a lizard, and a rabbit. And maybe we'll have National Bearded Dragon Day. Maybe there's such a thing. I'll have to Google that. But something like 2/3 of all households in America have a pet, which is more than the number of households that have children. And I mean, my wife and I, when we were young, right before we got engaged, we got our pre-child dog. And I think that's a very big thing with millennials today. Millennials get their dog first, then they have their children. But today, what's different is the premium products. We get better food for our dogs, better medicine for our dogs, luxury goods, premium products for our dogs. Our dogs get daycare. It's not just like in the olden days where you'd pay somebody to come and walk your dog once or twice a day. You send your dog to like doggy daycare, doggy day camp. It is such a big business. And because of the humanization of our pets, I expect that to continue to grow. And if you think of all these people that got a pet during the pandemic, these dogs require, and cats, whatever other animal you got, they require more care and more expensive care as they get older. They don't get cheaper. They become more expensive. You've got to have their teeth cleaned. You've got to bring them to follow-ups, vet appointments, emergencies, etc. So I, for one, am very optimistic on the growth of the pet industry. And there are going to be stocks that do well and do poorly, and they'll do poorly and well at different times. So you've got to decide, do you want to commit money to the space? Do you want to go with an individual stock like a Chewy or a Petco or a Trupanion or a Zoetis? Or do you want to go with the original pet stock ETF, which is PAWZ, which has been a really good place to be as well? Or do you want to just go with general investing and not worry about picking out any specific sector and just maybe go with 5 or 6 index funds like, the S&P 500, the Russell 2000 small cap index? I mean, I could make you a very good portfolio using just 5 ETFs, or we could make a really good portfolio using 30 to 40 different positions between individual stocks and ETFs. And that has more to do with personal finance, with what you want. I could tell you that as clients start hitting their mid 50s and 60s, they do crave simplicity. They do want to start to see fewer pages in their account statements. They want to receive fewer statements from different brokerage firms, and they want to start consolidating their assets. So it's all about personal finance. It's all about what you want. In any event, I am bullish on the pet sector. Whether or not you go with stocks or an ETF, that is up to you. If you want to get, if you want to go for more returns with more risk, or if you just want to take a more diversified approach. And diversification is a strategy that we use to reduce risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. So how did I do today? Did I do okay with the pet stuff? Are you into the pet industry? Is that something that you're going to first thing tomorrow morning buy a pet stocks ETF or buy Chewy.com stock or something? Let me know. I would always love to hear what your thoughts are. And wow, it's Thursday. So this is my last stream for the week, and I will be back on the Tuesday after Labor Day. Talk to you soon, and have a very happy and safe end of summer.